I think there's a lot of opportunity there to buy these assets and professionalize the operation.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Jonathan Twombly. Jonathan, how are you doing today?
I'm doing great. It's great to be on the show. Thanks for having me back.
Yeah, absolutely, man. Great to have you again. And man, it seems like we've known each other for a long time. We got to meet each other finally physically in the flesh in Charlotte, North Carolina. What was that? Maybe, I don't know. Was that this summer? Or?
It was in June. Yeah.
It was in June. Yeah. Early summer. So it's funny. You get to know a lot of people virtually through podcasts and Bigger Pockets, Facebook, whatever, all this kind of stuff. And you feel like you all of a sudden know them pretty well. And, you and I have, of course, chatted before, and you meet each other the first time. Like, is this the first time we've met in person? Yeah. Oh yeah, it is. Oh,
yeah. Okay. It was kind of funny actually that we hadn't, and you've been really active in my Facebook group and stuff. So we interact a lot with each other, but yeah, we had never actually see each other face to face. So that was fun.
That's always good. So, well, cool, man. So, welcome to the show. Why don't you give our listeners a bit about your background, then we'll dive in.
Sure. So I'm a former Wall Street lawyer. I did commercial litigation for about 12 years in New York and Boston and London. Then 2011 got laid off, which was something I was really happy about, actually, because I was really miserable in my job. I jumped into multifamily at that point and never looked back. I have a syndication business here in New York City called Two Bridges Asset Management. I don't have any multifamily deals that I'm lead sponsor on right now. I'm co-GP on a whole bunch of deals. I had sold my whole portfolio a couple of years ago, and recently I've becoming involved in hotel investing. So I just purchased a hotel, in the process of renovating that, and looking to do more of those. So that's kind of me in a nutshell.
Okay, so let's talk through. You sold your portfolio several years ago.
2019. Yep.
2019. Everything was sold by 2019. What was the idea of that? Why did you sell everything? And I guess we can talk through kind of that.
Yeah, so there were a number of things that were behind the decision to sell. One was that we'd held most of those properties for 4 or 5 years, just kind of getting to the point where we wanted to look at exiting and start to develop a full cycle track record. That was part of it. Part of it was also that these were all C to B minus kind of properties, and some of them performed spectacularly well, but others of them were really just not doing so great. We always had collection problems and the other kinds of things that you deal with on C properties. And I remember thinking, gosh, if we're having this much trouble getting people to pay us rent and the economy is really good, what is this going to look like when the economy is not so good? And there was a lot of talk at that time. I think people have forgotten because COVID sort of just overwhelmed everything. But there was a lot of talk at the time about, looking to go in that it was looking like we were going into a recession. There's even some economists who say the country had actually entered a recession in the beginning of 2020. But like I said, COVID overwhelmed it. But anyway, I was thinking gosh, I think it's probably time to move on from these assets. And at the same time, I literally got an offer for the properties that was way more than I thought they were worth. So a broker came to me and said, would you consider selling? And I threw out a number which was calculated to make him go away and leave me alone because I thought it was a ridiculous number. And he came back and said, yeah, they'll accept that. So I was like, okay, then I'm selling, so that's kind of what went into it. I didn't really anticipate sort of being out of things for this long. But then COVID happened and I kind of was
Yeah.
just kind of content to sort of watch that play out for a while.
So that that takes a level of, I would say, courage to sell everything too, and to go, hey, we're going to sit on the sidelines for a little bit. Maybe not sidelines, but we don't have. I don't have a I don't have a property right now, and so I'm selling. So I'm truly on the sidelines until the next deal is purchased. Looking back at that decision and knowing now kind of what happened, what are your thoughts on that? Was that a good decision? Do you say, man, I wish I would have kept those, or I should have done something different? Or do you go, hey, you know what? I think that was a good choice.
Yeah. I mean, the way that I look at it, I know if I'd held onto those properties, it would have made more money. Right.
Yeah.
I mean,
hindsight, obviously.
Obviously in hindsight, I mean, but nobody really knew, even in the beginning of COVID, how that was going to affect the property
especially
market.
at the beginning of COVID.
Especially at the beginning. I remember having, conversations with guys I mastermind with, where everybody was battening down the hatches, and they were like, and I just remember thinking at that time, like, I'm so happy I don't own any multifamily right now.
Yeah.
Right. Because I'm not dealing with any of this.
Yeah. I was freaked out. I mean, tenants didn't have to pay their rent. Literally, the government they gave them a free pass to not pay us.
Yeah. And especially if you had like C properties at the time too, right? That was where people really got hit, because your A-class properties, people just, I mean, that money was like on auto deduction from their accounts, and they didn't even pay attention to
ACH, it's happening, whatever.
Yeah. So but at the C stuff, I mean, I know, and I saw deals, I looked at deals, from that point forward, and, people would bring me off market stuff, and I'd look at it and go like, you have this major, I'm not touching that, because I see what's going on here with the collections issues that people have and stuff like that. So anyway, I was happy at the time I wasn't in it, but obviously I know that, like, if I had held on the properties, I would have probably made twice as much money as I made, because of the way the market got nuts. But you can't like live your life kind of second guessing yourself based on stuff that you couldn't have predicted. So I always go back, and I think, I made the right decision at the time to sell those properties. Like, we exited, we did well, we made our investors a lot of money. They were very happy. And, the whole idea that, well, maybe you could have made more money if you held on longer. It's pointless to kind of engage in that exercise. Not to mention the fact that it was really a kind of a black swan event that happened after that caused the property market to do what it did. And now, now we're kind of like, the comeuppance is happening now, right? Yeah. So
the roosters are coming to crow.
They totally are. So I still think it was the right decision at the time.
Yeah. Yeah. And you're right. I mean, it's easy to forget, but in 2019 into 2020, there was all this talk about a recession. We were approaching it. We were more than due for it. And there was a lot of kind of, I wouldn't say it was likely going to be a massive recession, but there was a lot of, indicators saying that we're probably going to see a slowdown, at least a small recession here coming soon. And then, like you said, COVID hit, and that just completely changed the entire ballgame. Of course, that was a COVID-induced recession for a very short period of time. I don't even know if you call it a recession. It was a COVID shutdown for a period of time there. But then the market went nuts, and black swan event that you could never have predicted. So you sold all these properties, but so how do you, like, you got these investors, you made them good money, and you don't have anything for them to get into. Was there a reaction there? Was there a level of communication that you provided them to kind of try to keep them like engaged with you? Or how did you take me through that? Because that's a little different too.
Yeah. So, at the time, I didn't really have a very big investor base. So most of the people that had invested with me there's kind of a small number of very large check writers. Right?
Gotcha.
And so they were kind of out of multifamily anyway. I mean, I made the money, and they didn't say like, hey, what's the next thing? It was kind of like, okay, we've done that. We've made some money here. And that was it. Now, one of those investors is now the investor in the hotel I just bought. I only have one investor in that deal. and they supplied all the capital for that. So they did come back, right? But they were also wary, especially when COVID hit and stuff, about investing. But so, it's interesting. Like one of the things that I did, probably starting before that, I had at one point early on in my career, sort of probably around the time when we first encountered each other, I ran into a situation where I had a lot of trouble raising capital for a deal. I had a really good deal and I couldn't raise the money for it, right? And was really shocked because I hadn't had trouble raising the money before, but like all my big investors were out for various, had nothing to do with the deal. Like, one of them was getting divorced. The other one was like, was in Japan, and they were like, hey, the deals don't look so great at this exchange rate anymore, so they were out. And I believe that notion, and the partner I was working on with the deal at the time, like we were like, hey, everybody says if you have a great deal, you'll find the money, right?
The money will come.
And so we're like, okay, we'll go for it. And then, buckets, right? And we tried to talk with some private equity folks. We were like really scrounged the bottom of the earth, scrounged the bottom of the barrel trying to find capital and couldn't do it. And so we had to walk away from the deal, lost a lot of, some of our earnest money deposit because we bought an extension. We bought, let some money go hard to buy time. And so at that point, I realized I really needed to switch my kind of tactics and start trying to develop a list. So that was when I started developing my Facebook group and started getting more serious about marketing and develop a bigger list. But those, like that first set of investors, they were kind of out, like until this hotel deal, and they didn't really. I do remember actually I had a deal that I was GPing, co-GPing a deal in Atlanta, and one of my investors really loved Atlanta, and he was going to put in a couple million, and then, but it was in the middle of COVID, and he owns all this property in Hawaii, like commercial property, like he owned the building that the Hard Rock Cafe was in Hawaii and stuff, and he wasn't getting paid any rent on commercial tenant, and he was like, we're not doing anything, like we're just hoarding cash to get through this. So the money that I've raised subsequently has been from that list I developed afterwards.
What are some of the things that you did to develop that list? You had your first investors and small group of investors. I'm assuming those were, friends, family, people you worked with, people maybe your spouse worked with, that type of thing. Is that correct?
Yeah, they were, basically some long-term, very long-term friends who were very successful.
So how then, take me through your approach that you took to build this new database, this new list?
Yeah, so it really was the Facebook group. And I was one of the first people that, built the Facebook group. And I mean, I think at the time, I remember Bigger Pockets had a Facebook group, but there was nothing going on in that Facebook group. And maybe Rod Cleef had one, I can't remember, but there really weren't very many. So I started this Facebook group, and my idea really, I was very not unhappy. I thought like Bigger Pockets was not serving the multifamily investor community very well. It was very focused on single family and fixed and flips and short-term rentals and stuff. And so I thought there really needs to be a place where people could talk about multifamily. So that group grew very fast, and it grew into the thousands like relatively quickly. So I was able to, from that list, develop an investor list, start getting people out of the Facebook group and onto my email list, and also develop a coaching program too from that group. So that group was really instrumental in helping me get past the friends and family circle.
Interesting. So people from that list then would connect with you, and you'd have investor conversations, and these people turned into investors through a Facebook group.
Mm-hmm. Yeah. I mean, and back in those days, I mean, that Facebook group was really active. I was really active in the Facebook group, it's kind of in there every day, answering a lot of questions, just kind of posting and stuff like that. So it was a good way to build credibility and build authority with people and kind of demonstrate my knowledge. And so
Yeah.
and forge a connection with people.
Yeah.
Unfortunately, Facebook is not as easy now to get like traction on Facebook. There's a lot of competition, but there's also Facebook has changed its algorithms so that people don't even see posts a lot of times. And so it hasn't been as good a way of developing an audience as it once was, but still, it was very helpful for me.
Yeah, and I'm not on Facebook much anymore. I was. Do you still have the group?
I do still have the group. Yeah.
Okay. Yeah. I mean, I I would see the posts all the time, and I would engage in the posts. And I quite frankly, again, I'm not on Facebook very often. I don't really spend a lot of time on it anymore. But when I am on it, I don't see the posts, and that's probably because of what you said. The Facebook's changed their algorithms. I started a Facebook group, and the challenge for me, and this was quite a ways after yours, right? So things had probably changed quite a bit. But one of the challenges for me, and why I kind of just said forget this, is I would only have advertising posts. Guys and gals that would put on there, "Hey, I got this deal," or whatever, a broker trying to put their deal on there, whatever it was. It was like, only spam pretty much that would happen. Every once in a while, somebody would try to add some good value. But how did you have a lot of that on your Facebook group, and how did you get past that?
So the first thing I did was I wrote a set of rules for the Facebook group saying you're not allowed to post deals.
Yeah, I tried to do that too.
And then I was very active about deleting. And I used to have a one strike policy, which was the minute anybody posted a deal, I would just ban them from the group. I mean, I wouldn't warn them or anything. I'd just say you're out. And we used to actually have a lot of fun in the group around that issue, where we would kind of like, people kind of like got excited. I would like ban somebody, and then I would like talk about it, and everybody would be like, yeah, you banned that guy. We also had like, at the time, I don't know if you remember the binary options virus, but there was this, like before Bitcoin, there's this thing that it was basically a scam, but it was this idea that like you would make a bet on the price of a stock being higher or lower than a certain price on a certain day. And it was just basically betting, but they called it a binary option. Yeah. And eventually the government shut this down. But there were all these people on Facebook who were like, there were just thousands of them who were like selling binary options, and they were always posting in the group. So we had a lot of fun around like the banning the binary options guy. And everybody was like, every time one of these people posted, like everybody would be reporting it, and they'd all be like commenting like you're a scammer. So it was actually kind of fun. But now I still get people posting deals. But what I find now is there's a lot of people who are posting deals are often people who have a VA who's just posting in every single group. And so even sometimes they're like friends of mine, and I'm like, come on, dude. Like,
yeah, what are you doing?
And they're like, oh, it's my VA. I'm really sorry. So, but I think in general, a lot of people they're not as engaged on Facebook as they used to be. Yeah. A lot of people who use it for business have outsourced it. So there's not even them engaged in it anymore. And I think it's really changed. It's not the fun place it used to be, so.
Yeah. What's the fun place? Do you use any other social media forums or?
No, I mean, I don't even really use LinkedIn. I know some people are very successful posting on LinkedIn to develop their multifamily business. It's something I've thought about, but I don't do LinkedIn. I follow a couple of like, waterfall sites or something on Instagram, like just to get some nice, beautiful pictures to my phone once in a while. And that's pretty much it. I've never been on TikTok. So, you
got to start your TikTok page, man.
That's what my marketing person is like. Oh, you got to be on TikTok.
Yeah, that's what I've heard. I'm not on TikTok either, but I've heard it's the place to be. Tell me about the hotels. Why hotels? What are you doing with those hotels, and what's the future in that?
Yeah, so the hotel business is something that I didn't really expect to get into, and it sort of has developed out of, I guess, call it like a passion project. But then I realized that there may be something more here. So we own a house way up in upstate New York in an area called the Finger Lakes, which is like a big wine region. It's probably like the best wine region on the East Coast, kind of starting to get comparisons to like Sonoma and Napa and stuff like that. And it's just a spectacularly beautiful place. And we would literally, to get to our house, we would have to drive by, but sort of about a half an hour before we get to our house. We would have to drive by this kind of old, kind of tired motel in an absolutely spectacular location. So you drive up, you hit the crest of a hill, you get this spectacular view of the lake, and there's this motel like right at that point. And it's just, it was like almost like a jarring thing, like the spectacular view with the kind of tired, hotel there. And we would always drive by it and say, God, it's such a shame. Somebody really ought to do something with this place. And then I was just on Crexy one day looking for, just to see like what kind of stuff was on the market up there. I was thinking, maybe might buy just a small multifamily for myself or something, or just do a small deal with a couple of friends. And I saw that this hotel was for sale. And not only that, but it had been on the market for like a year, and they just kept on cutting the price and cutting the price and cutting the price. And it was, during COVID and stuff. So, I'm sure that they had a hard time, but I was like, okay, this is kind of interesting. So I was like, well, I don't know anything about hotels, so I better find somebody who does. And I just asked one of a business partner of mine, do you know anybody who's in the hotel business? He said, yeah, as a matter of fact, my wife's cousin has got a hotel management company. Why don't you talk to him? So I took the deal to him. I had him underwrite it, and we started talking about it. We're like, you know what? I think this might make sense. So then I went to that investor I talked about before, who I'd made a lot of money with, the Japanese family, and said, would you guys be interested in doing this hotel? I don't want to do any debt. I'm going to do this all cash, purchase plus the renovation. And they said, yeah, no, we're interested. So it all sort of came together that way. It took us forever to close, right? I mean, just forever to close, even though we had no debt on the deal.
Why was that?
Oh, because, it was a mom and pop situation.
Sure.
They didn't really have a lot of records. There were all these things, like all these agreements with like their neighbors that were all on a handshake, and like, we had to sort all that stuff out and get them to paper all those agreements that they had with their neighbors. And there's like a shared water system and stuff like that. Like we had to iron out all those issues. And so it just took and then it was just the general kind of like small town stuff versus the big city stuff that you're used to. So, in New York, New York City, where everybody is always like, do it yesterday, then you get upstate and it's sort of like, yeah, when
the opposite. We'll get there when we can.
Well, yeah, we'll get to it. We promise.
Yeah.
So it took a long time to close it, but we finally did. And yeah.
And why cash? Why didn't you finance it? Why would you decide to go cash?
I just thought that it was riskier to do it with debt. I just didn't really know what I was getting into, like what the cash flow was going to be like. And I just didn't want to
took that interest rate risk off the table.
Yeah, not just the interest rate risk, but also the payment,
the payment risk,
having to pay the debt. And I thought it was because I hadn't done one before. I just felt more comfortable doing it all in cash. And probably, if we do more of them, now that I understand much better how these places operate, what the cash flows are like, I'll go at the next one in a very, very different way. But financing it will be one of the things that I'll definitely do on future acquisitions if I do more of them.
Yeah, interesting. And so is that your only hotel deal, or have you done multiple?
So far this is the only one.
And you like it so far?
I like it so far. There's a lot of reasons why I like this. So for one thing, there's a lot of this small non-branded hotel segment is interesting because there are a lot of these small hotels out there, right? And they're typically owned by people who are baby boomers, or maybe even older than baby boomers, like maybe even silent generation folks. Their children don't want to take over the hotels, right? And they probably live far away somewhere else. And the hotels are not really set up for the brands, right? They're too small for the brands to take over, or they don't meet the brand standards. So the only exit for most of these hotel owners is to sell to another owner operator. And if you think about that, like, well, who is really going to move to like one of these small towns and
But a lot of times they live right there. There's
oh yeah,
like
they
a
usually
house
live
right there.
Yeah, they usually live like next to the hotel or across
Yeah.
the street from the hotel, or at least in
Yeah.
the same town. And so like, who's going to buy these hotels, right? Like, people don't have experience running hotels. It's a real business operation. Maybe, somebody might want to take on the challenge in retirement of running like a B&B, like a small 4 or 5 bedroom inn. But like going and taking on like a 40 or 50 room hotel, right, with staff and all this sort of stuff, that's a big undertaking. So there's not a lot of exit for these people. As a result, you can buy these assets very cheaply, right? And they often have a lot of deferred maintenance, like you need to upgrade them. The rooms are just outdated, and they don't have the capital to put into them. So like, anybody who's going to buy the hotel also has to come in with a bunch of capital to redo it. So I think that creates an opportunity for people like you and me who know how to raise money, know how to bring in third-party management, know how to operate these things, from a step back from the operation, not like in it day to day. I think there's a lot of opportunity there to buy these assets and professionalize the operation. And we literally found that, on this hotel, they were doing things the way that they had been doing them forever, right? So taking reservations on the phone, nothing was automated.
Yep.
No technology.
No technology.
They weren't really advertising the hotel. They were very dependent on kind of like their repeat business, but their customer base was aging, right? And so
Yep.
just even since we took over, we haven't even had a chance to start doing renovations yet. We will this winter, but just coming in and improving the operations, improving the systems, improving the advertising. We had a really good season, and now we're really looking forward to what happens next year after we've completed our renovations and have improved the place. That be able to charge higher room rates. So I think it's a great niche. So we're looking for potentially to do more.
Is it what's the challenge of growing a business like that with these small operations? Is it property management? Is it maintenance? What's the biggest challenge? Because like you said, most of these are just like mom and pop. They live right there. So now all of a sudden you're taking that out of the equation.
Yeah. So that,
can you find?
Well, so yeah, that is a challenge. And I feel like I am pretty lucky that I found somebody who's able to manage these properties from a distance. And sort of one of the conversations I plan on having pretty soon with him is essentially like, hey, what is your ability and willingness to scale your business so that we can grow together on this, right? So that, but the other challenge too is in a lot of these, a couple of challenges, in a lot of these small towns, like the population is small. And so finding labor to work at the hotel is tough, right? That's not just the management piece of it, but just finding people to
the cleaners
and the front desk people and maintenance and all that sort of. So finding people to work is a challenge. And then, I've had discussions with the town, and, they're super excited about what we're doing, but, they've told me, like, I was talking with the mayor, and he said, one of the big problems we have in the town is lack of housing, right? I mean, this is like a problem everywhere, right? You go to small town America and they have a housing shortage, right? And so, and so they say, like, look, the housing is so expensive around here. And we're talking like a rural area, right? The housing is so expensive here that it's hard for us to attract workers into the town, right? To work.
They got nowhere place to live. I've heard that so many times out of these small towns. They have no place to live that they can't find labor.
Yeah. So that's the other challenge. Now this particular property, it actually came with a vacant house, which we're probably in the next couple of years, we'll rehab the house and we'll have that we can actually have, people live in to work at the hotel, which will help. But it definitely is. It is an issue. And I think the other thing too is when you have these hotels that are seasonal, well, what are the people going to do in the off season, right? You hire people to work in the season, and then they don't have a job the rest of the year. So, in this particular case, we're moving from seasonal to year-round operation. So at least some of the staff will get year-round positions as a result, but
Yeah.
but still, you need more people in the summer than you do in the winter,
Need
right?
more people during your peak season. Yeah. Yeah. Interesting. Well, it'd be interesting to kind of see how this goes and progresses. And if you continue to buy more, kind of how that operations works. And maybe you'll have a model that other people can follow to be able to buy, a dozen or more of these smaller hotels kind of around the antler inn and the whitetail motel.
Yeah.
And
I mean,
it seems like they're always labeled something like that, at least around here.
I mean, upstate New York too, it's the same sort of thing, so they have the same, it seems like they were all kind of built at the same time, like 1950s and 1960s, probably a big boom in building these kinds of small hotels. And so they all have the same kinds of names. It's like apartment buildings, all the 1970s apartment buildings all have the same kind of name on them. Right. And then, so it's the same thing with the hotels.
Love it. Love it. So Jonathan, what do you see in here? What are you kind of doing moving forward? Obviously we're in this kind of weird interest rate environment, get a lot of, I'd say the cracks, a lot of those indications that say we're heading into recession if we're not already in one. Kind of like back in 2019 and 2020, early 2020, but I would say this time's probably even more serious. But what are you kind of looking at moving forward, and how are you looking at the markets and multifamily and other various opportunities that might be good for your business?
Yeah. I mean, I think probably like most people you'd have on the show, I mean, they're very bullish about multifamily long-term. Right.
Yeah.
And I think that there is a lot of opportunity if you have a long view. I think, the issue is kind of getting over this hump in the market right now, but I do think there's going to be opportunity that we haven't seen in some time. I think there are going to be people, not that I wish ill on anybody, but I think there are probably people who went into deals too aggressively, over leveraged themselves, just didn't structure things well, or, were overly optimistic about their ability to execute a plan, and a lot of new people who got into the market too. And I think we're going to see, unfortunately, some pain and distress just purely from rising interest rates, let alone whether there's then the other effect of having, softening of rents, and rising vacancy. But I do think it's going to lead to some opportunity to buy assets at a more attractive price than we've seen in some time. So I'm looking forward to those opportunities, frankly. And if I can do more hotels, I'm now really starting to get into, I like, you'd asked me before about, I'm sorry to kind of be long-winded, but you'd asked me before about the hotel business. And one of the things I actually really like about this business is the creative aspect of it. The multifamily is a little bit, it's sort of like, you're kind of doing the same finish everywhere. Like you do your value add, it's sort of the same thing. It's like kind of cookie cutter. The hotel, you're just trying to provide a place that's clean and nice for people to stay in and stuff. But beyond that, there's not, maybe some amenities or whatever. The hotel business is very different because you have to convince people, like every single day, you have to convince people to stay at your hotel.
Yeah.
Right.
Yeah.
It's not like you convince them once and then they're there for a year and you don't have to convince them anymore. Like you got to constantly,
it's turnover.
You got to give people a reason to be there at a hotel, which means that you have to provide a guest experience, and you have to, you really have to think about like all the things, the comfort of the beds and the linens and the way the place smells and like the design. And so I've really enjoyed the redesign aspect of the hotel business and the rebranding aspect of it too. I mean, we spent a lot of time trying to come up with the right name for the hotel, and a name that also was appropriate for the hotel, but then also maybe we could take to other hotels if we want to build a brand. So I really,
the 12 point inn, or
yeah, exactly, the Antler
like
Inn, the new Antler Inn as it's called now. So
the new Antler Inn.
But I really like that a lot. That piece of it that I hadn't experienced with the multifamily to the same extent.
Yeah. Well, I'd imagine it's especially important on these smaller hotels where you don't have all the amenities. You go to the Holiday Inn or whatever it is, and they've got the gym, they've got the pool, they've got they got all the amenities that anybody wants. And so you go to the smaller boutique hotel. How can you provide an experience? How can you provide value to the younger generation, especially, who is more picky? And I would say, if you're catering to 70-year-olds, 80-year-olds, the silent generation or the baby boomer generation, older baby boomer, you probably don't have to worry as much about it. They're not, but the younger generations, I think, are much pickier. They just expect more. It's just how it is. And so you got to provide it.
Yeah. And that's, you do that through design, right? I mean, you do it through having a really like well-designed space that is really comfortable.
Yeah.
And like in this hotel too, I mean, it has spectacular views. That's a lot of the reason why people are going to be there. There actually is a pool and a restaurant with this as well. So, which is all being redesigned. Yeah. We have to tear down the pool because it's beyond its useful life, but we're going to replace it with an infinity pool. So that's going to be really a drawing factor too. So, I mean, we won't necessarily be able to repeat that on other properties that we buy, but I think there is the opportunity to kind of look for unique properties, or I like the idea of thinking about how you build a brand out of this, as opposed to just like a one-off. You buy this property, and you call it the whatever at whatever, like everything is named now. Thinking about, well, if you're going to build a brand and you're going to be buying a whole bunch of different assets in different places, what's the thing that ties them together? And so there's the design. If they look consistent, that's one thing. But also, I think what I've been thinking about is there has to be something unique about the property and the location, right? So that we can kind of say, okay, all of our properties are unique. There's like a unique experience, like because of where it is and what it looks over and stuff like that.
Yeah, I can't remember who I was talking to or how it came up, but somebody made a comment like about, Holiday and Best Western, you name it, Marriott. And when you say those names, certain people, that's their hotel, right? Yep. And so you go, there's certain people that are just Best Western people. They see Best Western, that's where they're staying. They see a Drury Inn, that's where they're staying. They see a Holiday, whatever, that's where they're staying. They just have that name recognition. And you could probably create very similar with your more boutique hotels, and where that is the experience. If somebody sees that brand, they already recognize it with excellence, with a great place to stay, great service, all that kind of stuff. And they're going, let's stay there. We got the Antler Inn, or we got, Jonathan Twombly's hotel, and we're going to stay at that one because we know what it is. We know the experience that we're going to get there.
That's the idea.
Yeah. Yeah. Well, back to the economy. I think you're right. It's going to be interesting to see what happens. We'll see what types of discounts we'll see. It depends on, how many things that you mentioned are going to come true, right? Do rents start to see a decrease? Do vacancy rates go up? And how high? And how many of these people that maybe bought a little riskier project or whatever it is, how many of those people need to sell or forced to sell or get foreclosed on, or have, the lender breathing down their neck? Kind of all depends how much of that really happens to see the types of discounts. But I do agree with you. I think we're going to see some opportunities out there. There is a lot of capital chasing it, so I don't know how good they're going to get, but I do feel like we'll see a little bit of opportunity. So that's exciting. But you also never want to see, of course, people get hurt, which ultimately probably will happen.
Yeah, I mean, I think what you'll see is the stronger players will continue to buy, right? But I think a lot of the weaker players will just not be able to. They won't be able to get the debt. They won't be able to raise the equity, and they're not going to be able to compete. So I think that'll cause a bit of softening in pricing. And I do think you're starting to see a little bit. I mean, just literally before we got on, something flashed across my inbox that I didn't quite have a chance to read, but about vacancies ticking up. I think it was like in a third of the markets across the country, vacancies are up now. Now, by how much, we don't know. And they've been so low for so long that they could still be very strong occupancies, but the trend could be going in the wrong direction. And if you've underwritten things too tight, right, or everything has been priced to perfection, and it's not perfect anymore, then, surprisingly little can cause some deals to not work out.
Yep. Yep. Yeah. It's I think exciting times, fun, interesting times. I agree with you. You think about it, and I never quite thought about it like that, but there's a lot of these syndicators or investors that maybe don't have quite the reputation or quite the experience. And so it's going to be harder for them to raise. Right now, raising $1 million just isn't that difficult. A couple million, 3 million, 4 million. You put together a couple people, you can easily come up with, $2, $3, $5 million. But what's going to happen, as the economy starts to shift, and are those people still going to be able to raise that capital? The answer is probably, to your point, probably no. And so that leaves less buyers in the market, which leaves less competition, which ultimately ends up favoring the buyers a little bit better.
Absolutely.
So love it, man. Okay. A couple last questions. What are you reading today? What's a book that you've read, maybe this year that you've really enjoyed?
So I'm almost done with a book called The Children of Ash and Elm, which is about the Vikings. So that's been really fun, because it's actually not the typical book about the Vikings where it's just like, oh, they attacked here and then they attacked there and then they attacked there. It's actually really attempting to get at what drove the Vikings, like what kind of larger forces were driving them to expand out the way that they did when they did. So yeah, it's really fascinating book.
Cool. What's a daily habit that is really helps you? So
have become really big on planners, right? And so I use a planner by Michael Hyatt. I don't know if you know who he is,
yep.
But free to focus. And I've just found it extremely helpful, where you're kind of like planning on a quarterly, monthly, and weekly basis, and kind of every week reviewing your progress and kind of setting out your big rocks, that you have to hit. And I can literally tell the difference on a day when I've like sat down properly and done my kind of look forward to the day, and the days when I don't, in terms of like my productivity and even just my mental like outlook for the day. So it just really helps me get set and get focused.
What's a mistake that you've made, and how can our listeners learn from it?
Well, I mean, going way back when I first started doing deals, a mistake that I made was relying too much on the seller's financials in underwriting deals, and not understanding that my cost structure was going to be much different than their cost structure. And so I think the first deal I did, I definitely overpaid for the deal, even though I thought I was getting a good deal, and the broker said everybody said I got a good deal. I think I overpaid because I didn't really understand that I wasn't going to get like those insurance rates, and like I wasn't going to be able to run the property with one person, like that, that sort of thing. So
yeah, believing too much in what the seller provides, and the seller might be able to run it for that. It's maybe not that the seller's
they weren't. The seller wasn't lying. The seller just was.
Sometimes they are, but
these were like this wasn't the pro forma. I mean, this was their actual.
Yeah, this is what they were doing, but doesn't mean that you can run it like that efficiently. And the other thing you got to think about is, well, why is the property operating like it is, right? Sometimes you're going, hey, this is such a good deal because rents are under, and the vacancy's too high, it's higher than the market, and you go, okay, I can do this. And then, but you're using the seller's expenses. Well, wait a second. The reason why the rents are low and the vacancy is high is because the seller's not spending any money on their property.
I mean, another mistake I made on that first property, which I'll never do again, is that I didn't realize that the property had a bad reputation in the market, and we didn't rebrand it, right? And we should have like the first thing we should have done was just go in there and change the name like day one, to just announce to the market like, hey, new owners in town. And the thing that was kind of amazing is that the place had never changed its name. Since it was built in the 70s, it had never changed its name, but it had been through like 6 or 7 owners, and they'd all kept the same name the whole time. But we should have just gone in and just like changed the name and just announced like, hey, new sheriff in town. It's not the same old place that you guys are used to not renting at.
Yeah, especially when it's got a bad reputation. That name change can be so valuable and quick, right? Name change and a little bit of work on the exterior, a little bit of landscaping, a little bit of paint,
new sign makes such
new sign.
I mean, putting a new sign out front just is it's a really good use of your money.
Yep, agreed. All right, Jonathan, last question. What are your 3 pillars of wealth creation?
Consistency, and consistency. I would say those are really the 3 most important things. Whatever it is that you choose to do, sort of whether it's marketing your business or networking or talking with brokers or whatever it is that you're doing, like you have to do it consistently, right? So when people ask me like, well, how do you get investors? I say, well, there's lots of different ways you can get investors. You could start a podcast, you could have a Facebook group, you could go out and network one-on-one. But the thing is that you have to do it consistently. They'll all work but you have to do them. You can't go out and network one time and then say, that didn't work, so I'll do a podcast. And then you put up 2 episodes and then you're like, oh, that didn't work, so I'll try a Facebook group. It almost doesn't matter what you do, but do it, own it, stick with it. And that's the key to success.
Yeah, 100%. It's so easy to get, I think it's part of that shiny object or whatever. You just you get distracted so easy. You say, oh, I'm going to try this. Oh, it didn't work. It did. I hosted a meetup and only 3 people came. I'm not going to host a meetup anymore. Well, you've hosted one. Like, of course, 3 people are going to show up. How about you host 50 of them and see what happens?
I think people don't realize how long it takes these things to get traction. Right. But then once you get the traction, how easy it is to maintain the traction.
Then you can maintain. Yes. Yeah. I love that. Absolutely. All right, man. Look, I really appreciate your time. Appreciate the value you've been able to add. I exciting about the hotels. I'm interested to see how that evolves. How can our listeners get in touch with you, learn more about what you got going on?
So a couple of ways. The direct way, if you just want to get on my investor list, is to go Google Two Bridges Asset Management LLC. It will pop right up. If you do that, it's easier than explaining the URL, because another mistake I made is funky URL. So get a simple URL for yourself if you start a business. Just Google Two Bridges Asset Management. And the other place you can go if you want to get on my list and see more sort of educational materials and content like that is go to apartmentinvestorsclub.com, and you'll see my podcast and you'll see all the stuff we have to offer there.
Love it. Jonathan, again, really appreciate it. Thanks for your time. And, listeners, look, reach out to him. He's here. He gave you his information. Reach out to him, connect. Like Jonathan's got just a ton of value to be able to add at the Facebook group, all that kind of stuff. Just a lot of value. And I appreciate you being so giving to everybody. I know I've learned from you. I know everybody that comes in contact with you probably learns a couple of key golden nuggets. So appreciate your time.
Thanks. I appreciate it very much. Oh, and I forgot to mention, we're having a conference in April 2023. So reach out to me for more information about that. And hopefully we're going to have Todd speaking there too. So
let's do it.
Yep.
All right.
Thanks.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.